Hello, my name is Richard Hudson, and I'm here again with another short, quick video. And my topic is keep getting denied loans. Are you tired of getting denied loans? And if you are, I'm going to show you a concept on how you can stop getting denied loans. And what is that? Become your own bank. That's right, you heard it right. I'm going to show you how to stop getting denied loans and how to become your own bank. What I'm going to do is I'm going to go over the nine concepts that the bank uses and how they make money and how they make money off of you, off of me, off of you. And with these concepts, I'm going to show you how you can use the same concepts to become your own bank. Exactly what the bank do. The bank secrets, I'm going to show you how it can be your secrets. And the first concept that the bank uses is what's called fractional reserve banking. And fractional reserve banking is a concept that the banks use. Is what it says that for every $1,000 that a bank has, they have to have $900 on reserve. That means they could take 900 of those dollars and lend it out and charge interest, and 100 of that they got to leave it in reserve. So that's the money that they have to have on reserve. So when you go to the bank, you make a withdrawal, and that's the money you get when you go to the teller or the ATM when you get the cash. That's the reserves that they got to have. So out of every 1,000, 900 they can use to lend out, charge interest, and the other 100 they have to leave on reserves to give you when you come make a withdrawal, you and I. The second concept that they use is called OPM, other people's money. Everybody heard of other people's money. That's our money. They use your money tied into fractional reserve banking to lend it out to make money. They charge like 6.5, like 2025 right now, 2026. The interest rate is like 6.5%. So that's what they charge you when you get a mortgage or you get a loan from them. The third concept they use, their secret, I'm going to show you how it's going to be your secret. It's called compounding interest. They let it sit over time and compound, and that's how they make money. Albert Einstein said, compounding interest is the eighth wonder of the world, and whoever understands it will be wealthy. The bank's concept, now I'm going to show you how it can be your concept and your secret. The fourth concept that the bank uses was called BOLI. It's an acronym that says BOLI. It means bank-owned life insurance. What banks do, they have billions and billions of dollars of life insurance on their books. They have. And what they do is they borrow off it and they borrow assets. They borrow assets, they buy assets, they use it as collateral to buy assets. They even use the money to lend you and make interest off it, just like they use with the fractional reserve banking. The bank secret, I'm going to show you how it could be your secret. The fifth concept is what banks charge, high interest rates. This is how they make money. Charge you high interest rate. Whatever the Fed said the interest rate is, like I said, 2026 right now is like 6.5%. My Lord, that's what the bank can charge you. The next concept, when you borrow from a bank, you're going to need collateral. Collateral is needed. They want to make sure you have some kind of collateral to back you up, to make sure that you can pay them. You know, they don't want to take the chance and they lose money and they lose a profit, because banks is in the business lending money to make a profit, and they want to make sure you got some kind of collateral to prove that you can pay it back and not default on the loan. The seventh concept you're going to need is credit score is going to be needed. They're going to your interest rate, however high or low it's going to be determined on what kind of credit score you got. Today, the average credit score for America is like 620. So anything below that, they may charge you, or you might be denied. You know, depending on your credit score determines on the interest rate that they're going to charge you, or how high or how much. They want you to have like skin in the game. Make sure that you don't default on the loan. They want some kind of guarantee. The eighth concept is that if you have bad credit, you're going to need a co-signer or a guarantor. They want to make sure that you're able to pay the money. Again, banks is in the business of lending money and making money, and they don't want to lose any money. So they need these guarantees. The ninth concept that the bank knows is that debt creates money. And what does that mean? Debt creates money. Every time that a bank approves a loan with the stroke of a pen, they created money out of thin air. Poof. Debt creates money. Debt stimulates the economy. When debt is created, that circulates money in the economy and keeps it there. That's economics 101. It's just how it is. And banks know this. These 9 concepts, the bank secret, I'm going to show you how it's going to be your secret. How to become your own bank. Tired of getting denied loans? Become your own bank. Now moving over to you. You, I, us. The infinite banking concept. I know you've been seeing this and hearing this on social media all over the place. The financial gurus, everybody has a platform on it, life insurance agents, fiduciaries, whatever they may be, talking about this infinite banking concept and what it is. There's a lot of misconceptions about the infinite banking concept, and today I'm going to go over it and try to make it clear and, clear up those misconceptions. The infinite banking concept, it says that to do it, you have to take out what's called a whole life policy, whole life insurance policy, right? From a mutual company, because the mutual company gives you guarantees, level benefit that never changes over the life of the policy, and they pay dividends, right? And you let it build up interest, and then it, you can borrow off it. That's the infinite banking concept. That's the vehicle that's used. The second concept is compounding interest. Like I said, the bank secret, now yours. You buy the whole life policy, you pay the premium, you let it build up, and it builds compounding interest over time, right? The third concept, when you become your own bank with the life insurance policy, the infinite banking concept, no high interest rates, unlike a bank that gives you high interest rate. There's no high interest rates. The fourth concept, there's low interest rates. They're usually determined by the carrier, might be 4%, 4.5%, 5%, much lower than what the bank is going to charge. The fifth concept is no collateral is needed. Unlike a bank, you need collateral to prove how you're going to pay the bank. You don't need no collateral because you borrow from yourself. It ties into the sixth concept. Cash value is your collateral, because what the bank is borrowing, they lend you off your cash value. That's your collateral. It's collateralized by your cash value accumulation, whatever it is. You have $200,000 in cash value. Over time, you let it sit, you let it compound interest. Say you want to borrow 50, the bank is going to lend you, not the bank, the insurance carrier is going to lend you the 50,000 because you have 100. It's collateralized. They're going to charge you the 4.5%, 4.5 or 5. That's what you're paying back to yourself. Unlike the bank, when they charge you interest, you paying them and they make the profit. When you pay yourself back, the profit goes to you. When you pay it back, it just makes your cash value accumulate higher, which gives you access to borrow more. The seventh concept is you get what's called living benefits when you have a whole life policy. This is a part of becoming your own bank. You get to borrow off of it while you're alive. You can borrow for anything you want. You want to send your kids to college, you want to go on a family vacation, you want to go on a cruise, you want to go to a casino, whatever you want to do, you're able to borrow off it and get the living benefits off of it. The eighth concept, that you don't need a co-signer. Unlike the bank, you need a co-signer or a guarantor, because you are the bank. You are your own bank. You borrowing from yourself. So you don't need all of these things, all of these requirements, all of this red tape that a bank makes you go through. You don't need that when you become your own bank. Just like the ninth concept with the bank says, debt creates money. Your premiums create money, because what you pay into the policy, the money is being created, is the cash accumulation is the money being created. So every time you pay into the premium, into the policy, your cash value grows and grows. That's compounding interest. The eighth wonder of the world that Einstein said. And he that understands it will become wealthy. So now you have the bank's concepts. Now their concept is your concepts and your secret. This is the infinite banking concept. You mimicking what the banks do. This is how you become your own bank. Doing the exact same thing that the banks do. But you have more benefits than that. Infinite banking, compounding interest, no high interest rate. You have low interest rate, no collateral needed. Your cash value is your collateral. You get living benefits to do whatever you want. You can borrow the money at any given time. If you never pay it back, it won't be reported to your credit score, not even to the credit bureaus, none of that. You don't even need a credit score. It doesn't even harm your credit score. If you don't pay it back, they just subtract whatever you borrowed throughout the years from the death benefit. So if your death benefit is $1 million and you took out $200,000 throughout the life of the policy, they're going to subtract that from the million, and your beneficiary is going to get $800,000. And it's not reported to no credit bureau, and you don't mess your credit up, nothing. And it's not a hard inquiry or soft inquiry that you get when you apply for credit. So with that said, that's the benefits of becoming your own bank. So if you're tired of getting denied loans and you want to become your own bank, follow these concepts. Collateralized debt Debt creates money. Your premiums create money. The money is created and it's your money because you became your own bank. You don't have to go through all of this. The bank's secret, now yours. Anybody interested in knowing how to do this, contact me, DM me, leave me, give me a comment, like, share this video with your friends, your family, anybody that's interested. And if you have any questions, feel free to reach out. Hope you like the video, and I hope to see you on my next one. And with that, have a blessed day.